Hey everybody, it's Bo Benjamin here with Bo Benjamin Realty Group, powered by eXp, and today's topic is, how does real estate investing work? I get this question a lot. Everyone knows that I have real estate investments and that I'm also a realtor. They'll ask me what I do, how I've obtained properties, what's the best properties to look for. There's just a million questions that you could ask with regards to real estate investing. Today I decided to walk you guys through a quick investment, and I'm just going to do it at random. Truth is, there's hundreds, if not thousands, of ways you can invest. I choose to invest in what's called buy and hold real estate investing. That typically means you're buying a single family residence and renting it out to someone on a monthly rent basis. And the truth is that you can do multi-unit properties. 1 to 4 units is residential still. 5 and above is considered a commercial property. You can do commercial strip malls and do triple net leases and do development of properties and rent it out to businesses. You can flip properties as considering investment. There's many ways to invest and be in the investment game. Let's just take a look at one that I typically do, and we're just going to do an evaluation of a property for you here today. I'm going to jump over to my screen. And this is the MLS. This is why I became a realtor. I was an investor first, and I'm just going to go find a random property. Now, I live in this area. This is Westfield, Indiana, and I'm going to find a property that is that's actually for rent. You see there, a rent price. That's rent. That's rent. We're looking for some. Okay, so here's a good sign right there. If you're looking around at different properties and you see 3 rentals in a same vicinity, then you see a property for sale, there's a good chance that that property for sale might also be a good rental or a good investment. So let's check this out. Let's click into it and then let's go evaluate it. So we got 41 West Quailwood Lane, and this is just a random property. I had no idea what I was going to do, but I'm going to go to what's called biggerpockets.com. It's just a website where you can actually ask a lot of investment questions. This is where I began my investment career. They have a great podcast, and this is where I've kind of grown my investing knowledge over time. There's many books I've read, other things you can reference, but this has been kind of a mainstay as far as my investment career goes. So I'm going to pop in the address that we're looking at, and I'm going to click next. Now, to get these calculators, if you want these tools, you go to tools, renter. There's all these calculators, they call them. They're estimate tools, and you can have access to them if you pay for them unlimited. Otherwise, you can have access like 3 to 5 times or something like that before they tell you they want you to pay for the membership. Now, if you're going to be a full-time investor, the membership is undoubtedly worth it just to have access to these easy calculators. So let's plug these numbers in. I'm going to skip back and forth. So this is priced at $285. We're going to put in just like we're buying it off the market, and then I'll kind of teach you how to do the investment. So typical closing cost in Indiana, probably like $3,000. Now, if you have a question, the great part about this website is you can go in and usually get help. There we go. It says 1 to 2%. So actually 1% of 300,000 is 3,000. So that was not too far off. Let's actually look and see. I don't think I need to rehab this property, but let's look at the pictures. It looks like it's in decent condition. So no rehab needed. I may do 1 or 2 things to meet my preferences, but it doesn't need a gut job down to the studs or anything like that. So not going to be rehabbing the property, so we're just going to go next. Typically, most investment bankers are going to ask you to put 25% down. So it already has that. You may be able to find someone that will do 20. So I'm going to need that much money for this property to buy this investment. Now, if you don't have that, that is something you need to save up for, or try another version of investing, or just invest in a property that isn't as expensive. Now, interest rates vary based on where you're at, and an investor interest rate is typically going to be about a point higher than what you can get on the market. So I'm just going to plug in 7. We're going to do 7% as an assumption, and then I'm going to do a 30-year loan term. And next we're going to go to income. Gross monthly income. Now this is nice. This tool has an estimator built into it. But as you saw, let's go back to the map because we were seeing other, we're going to flip back and forth a couple times. So this is 3 beds, 2 baths. We have a 3-bed, 2-bath, 1,700 square feet, and that's for $4,500 rent. 59 days, so it's not capturing 4,500, but that's what they're asking. Let's go back. We got 4,000, 5,000. Those are 3. Let's look at the stats. 4,000, 1,100 square feet. Again, 59 days on market, so it's not getting that. That's what they're asking. So we have to be realistic. The estimator says 2,000. Typically what you want to get is about 1% of what you purchase. So let's just go with that. Let's say we're going to charge $2,850. Given the other ones, we're trying to get 4,000, 5,000. I think this is reasonable. And you can also go to different sites. Let's just click into here. This one has this, and this will show you different units around the area that are and what they're capturing according to this tool. So even $2,850 might be a lot based on this. I also like to go to a website called rentometer.com. And we can plug in the address there. You can go to Zillow if you want and see what the Zestimate is. There's usually a rent Zestimate. Rentometer.com. I don't even know if it'll let me. It saves your attempts, and after so many attempts, it wants to do it as well. So we're going to go 3 beds, 1.5 baths, analyze. So it's actually lower. So $2,850 might be a lot for this area, but again, based on what people are asking in the 4,000 range, I'm just going to go with it because this is just honestly to figure out the analysis. So typically you want to try to get 1%. Now, if you don't think you can get 1%, then put in something lower. You know, we'll mess with this number here in a moment as we get things done. Taxes are typically going to be 2% after the investment. Indiana, you're a year behind in taxes. You're going to go from 1% property tax to 2%. So if we're buying it for $2,850, the best way to do that is just double that. And so we're going to have, what does that equal? $5,700 a year. So it'll take a year to get there before it doubles, but it will go up because you can't put a homestead primary home exemption on it. Insurance, I recommend you get quotes. I'm gonna plug in $1,500 a year. That's probably a little low, but I just need the structure insured. I don't need the contents. So make sure and tell your insurance agent you're looking for a quote for a rental, and you just want the structure. So all these, as I said, you can always just look and kind of do the middle, right? So 15%. Repairs and maintenance. I like to buy properties that are in good maintenance, and that one looked like it was in good maintenance, so I'm going to go on the lower edge. This is an area where rentals are almost always occupied, so again, I'm going to go on the lower. This says to do, it's 3 to 10, so actually I'm going to change that to 3. Capital expenditures, this is 5 to 15. I would do at least 5. And property management depends on the area you're in, but this is 10% in Indianapolis. And then we have the tenants pay these, so we don't need those. The HOA, it pulled automatically. I can go verify that by clicking into the listing and finding the HOA. It's $190 annually, 15 times 12. Seems close. I'm not doing the math in my head, but we'll go on. All right, finish analysis. This is what we wanted to do. Let's look at some important numbers. Let's scroll up to the top. So it says it's going to cash flow. So first and foremost, you want this number to be positive. If you're not making money, then it's probably not an ideal scenario. So that's a first good sign. Secondly, you can come down here and see how it pans out. $2,800 income, that's if the rent's $2,800. Expenses are going to be $2,692 with your mortgage payment plus your other savings. So I am an investor where I'm just holding this for the long term. So I actually am okay with getting rent even with this. As long as I'm saving money in the right buckets, then just netting zero each month. I'm not trying to live off this. This isn't going to, supplant my day job to get $157 a month. But I now hold this property, and as the property appreciates in value, I will gain that appreciation. I will get tax breaks associated to having a rental, and I will have someone else paying off my mortgage every month. So the renter is going to be paying this off every month. So there's your cash on cash return on investment. Now you may say, I can just go put the same cash down payment, $74,000, into a treasury bill and get 4%. That may be your decision, but that's just a portion. That's cash on cash. So that's investing this much money. How much money am I getting back? To me, this is a little bit of a short-term mindset, because you're looking at the cash on cash yearly and immediately, whereas that's not going to tell you what your appreciation and everything that you're going to get back out of the property years from now if you buy and hold long term. 5-year annualized return, that kind of gives a better picture of this investment. And then here's the slider. Like I said earlier, as long as I take it down to 26, so I just want to barely meet, break, that's $50 over. I can take it down one notch maybe. Now I'm negative, so I would have to rent this for about $2,700 a month to make this work out for me. And then you can change these sliders. Honestly, in Hamilton County where I live, it's almost zero. Now, a lot of people say that's a dangerous way to do it, because every once in a while you might need a month in between renters to make a repair or get it ready. So 3% is nice. It gives you that flexibility and buffer. And then you can adjust your purchase price too. So say that you find out the most you can rent this for is $2,500. If I edit this and just say $2,500 and then go update analysis, we get back to here. Now I'm in the negative. So now I can use this slider, and if I can say, okay, I'm not going to pay $285 for it, but if I pay $280, what if I pay $275? So how low do I have to go to get this to cash flow? So this is an excellent tool just to be able to play with these sliders to decide. And then ultimately, this is your expense breakdown, how much you're paying in mortgage, taxes, everything else, and seeing where all that money's going every month, $2,600. And then you can play with these too. You're going to have to pay 10% management, but vacancy, maintenance, CapEx, these are safety buckets. These are what's going to pay for your roof, your HVAC, plumbing goes bad, etc. You need to be saving these. Some investors will say, well, I can get this to work because I'll take $250 off this, and that way I don't have to charge as much rent, and all the numbers will work, and they work fine until you get one of these major problems where you need maintenance dollars or capital expenditure to fix the property. So that is the general assessment. I would probably look into this further, honestly. This is a decent, and this is what I love. This at the end, this is where property value is going up, your mortgage is going down, and when you look at it out here in year 30, you have a $500,000 property because of appreciation over time in 30 years. You're cash flowing $11,000 a year, and your mortgage payment goes obviously to zero eventually. And this is a $500,000 investment long term, right? And it's going to average about what the stock market averages. So, and that's probably not including your annualized return, is probably not including your depreciation and your tax benefits. So this is how you or I would do a rental investment. And I hope that helped you. There's much more to it. This was very quick, obviously, but it's a way to get started. I love the BiggerPockets tools. It's ways to evaluating properties. You need to do this a lot of times because you may find something that's way better investment just down the street from this one. So the best way to become an investor is to practice doing these evaluations, and then you'll start to get comfortable. It's just like shopping for any other commodity. If you know what all the gas prices are around the city, you tend to know where to stop for gas, right? Well, that's a very simplified example, but if you do the evaluations of properties in different neighborhoods, different pockets of the city, different places all the time, you start to learn and pick up where's the best place to invest in my city. So I highly recommend that you practice using this tool or other tools, and you get good at it, and then you can always find a professional's help. If you are in Indianapolis, welcome to come and talk to me. Be happy to help you find an investment property for your portfolio and any other real estate needs you might have. Like and subscribe the video if you want to see more, and I'm always here for your real estate needs. Thank you so much. Have a great day.